Today's episode is filled with tons of alpha on all things stablecoins and legislation surrounding them. However, just a note that it was recorded prior to Circle's IPO filing on April 1st. Dante has also endorsed the House's stablecoin bill, the Stable Act, which is set to be marked up by the Financial Services Committee April 2nd. Today's guest is Dante Disparte, the Chief Strategy Officer and Head of Global Policy at Circle. Dante has been a part of the myriad of policy developments happening across the crypto industry. And if you didn't know, Circle is the issuer behind USDC, the second largest stablecoin by market cap. We're excited to talk policy, his take on stablecoins, the Trump administration, and crypto more broadly. Dante, welcome to the show. Thanks for joining us.
Thank you, and congrats on launching it.
Thank you. We're super excited.
To start off, Dante, a question we want to start asking all of our guests, so you're going to be the first one, is what does crypto in America mean to you?
Yeah, first of all, it's a great question. And I was one of the people who very quickly celebrated the launch of the show, and even the title says it all. Crypto to me is a uniquely American technology. And the way I try to frame it from a policy vantage point is it might not be right for everyone, but everyone's rights to participate should be protected. And so I think of crypto in America as a technology that genuinely can empower people in a whole host of new ways.
And when you're looking at policy from a global POV, what are some of the nuances that you have to consider and our listeners should keep in mind throughout this conversation?
Yeah, I mean, first, it's we want broadly, I think, our way of doing business. And by that, I mean the greater us, the American crypto developer, the companies, the investors, the developers that are operating here, to make this technology an export product. I've always thought of digital assets and crypto and blockchain as a technology perhaps peer only to the internet or to other exponential technologies like AI that has deep national competitiveness, national interest, and national security at heart. And wouldn't it be great if we could operate on a basis of legal and regulatory certainty here in the US, such that the products and services we offer don't get fragmented or governed by other countries' rules?
Yeah, I'd love to dig into that global perspective for a second. I know we're going to have a lot to cover, as it relates to the U.S. Dante, Circle was one of the issuers, I guess maybe the only U.S. issuer to go open an office in Europe and engage with the MiCA regulators pretty early on. Can you just walk us through, issuing something like a euro stablecoin versus USDC and what it was like to go into those sort of two different regulatory markets?
Yeah, I mean, for one, we have tracked the development of MiCA, the Markets and Crypto Assets Framework, for quite some time. And MiCA was interesting watching it develop. In part, it was accelerated because of my prior project, which, the small stealth mode project called Libra. And then nonetheless, when it became a reality, it was sort of vindicating in some respects to be here at Circle and watch a company go from, zero to invested in France to an operation that could passport across all of Europe. And what we've done is we made a commitment to the Europeans that we would export, if you will, our digital euro stablecoin EURC to MiCA. And that at the same time, we wanted to ensure continuous circulation of USDC. Subject, obviously, to the rules that are in place under MiCA, but at the same time, this idea that we would have transatlantic harmonization. All of that sounds very nice, but as you can imagine, the real work is pretty nitty-gritty. So we obtained an e-money license out of France. We were the first major company to do so. And then we have seen quite a lot of growth and adoption, actually. The euro stablecoin, for example, is the fastest growing and largest, albeit from a small base. And then obviously the continuous circulation of USDC is critical because the dollar is the pricing currency, the reference currency, and currently the winning currency in this early internet fight. And so we want to ensure that, USDC continues to enjoy access across the European market.
Dante, why do we need stablecoin legislation here in the U.S.? What are we missing exactly that would make the regulatory environment that much better for us?
Yeah, it's a good question. I've tried to take a very, very optimistic glass half full approach to this for literally years now, having been the either awkward person seated next to the witness in Senate and or House hearings or myself in the hot seat. And I take the sort of, the U.S. will do the right thing when we've exhausted all other alternatives view of the world, which is that on the one hand, you could see how not only have stablecoins been the persistent so-called killer app in crypto, It is a category that is reaching, population scale utility value. What regulation would do is, number one, it would create a competitive playing field where banks and non-banks and other actors can build their products against U.S. certainty. It could also ensure that, you and me as potential end users of these products never suffer sort of the category of stablecoins that we have seen. Terra Luna is just one example among many that are stable in name only and sort of lack that foundational trust and liquidity through the banking system. And so U.S. legislation can sort of level that up and then effectively make this product a U.S. export product to the rest of the world. And one of the questions, for example, my European regulators ask all the time is, well, under what regime do you live in the United States? Now, here in the U.S., we take a sea to shining sea approach in terms of the state-based licensing. But the U.S. is an outlier in not having a federal framework for payments and or stablecoin activity. And so legislation would be huge for the country.
It's funny you brought up the comment about stablecoins, because I used to say that during the Terra Luna debacle as well, that it's not necessarily a stablecoin, it's literally just a name for it. But I think in nature, there are a handful of quality stablecoins out there, USDC being one of them. You also brought up before the European market and kind of demand there. I feel like when it comes to stablecoins, though, that the US dollar denominated ones are like insanely more popular than anything you could see with like the euro or yen or other ones. How do you think about that in terms of advocating for those types of coins? Is there a big demand for it, or are you more focused on like US dollar denominated ones?
Yeah, it's a great question. So, as you know very well, the many countries took the view that their central banks should be the core drivers of payment system innovation and or monetary innovations in their countries. And so over the past 6 or so years, we went from not a single central bank in the world was serious about a so-called central bank digital currency to more than 114, representing 95% of world GDP. The biggest of which is the People's Bank of China launched an ECNY, a digital version of their national currency. My own view is, and frankly, one of the reasons the dollar is the successful currency in the internet age, is that a free market rules-based approach to innovation and payments has not only ensured that the dollar, ever since the Bretton Woods system was established in the 40s, all the way through to today, the movement of money as a free market activity is powerful. And so, I loved this past Senate markup hearing because many of the senators were analogizing stablecoins to a traveler's check. The physical check didn't dethrone the dollar. It gave you the ability to set a use-by date and a denomination for your check, extending the utility value of the dollar. And in some respects, today's generation of stablecoins have done that really successfully. But then you also have to acknowledge that, well, what would happen if you had all of these alternative currencies also expressed in this form? Well, first, it would then show that in some countries, the money may not be worth the paper it is printed on. So you have terrible examples of hyperinflationary currencies all over the world. And in others, you might have great examples of currencies that ought to be fungible with, again, today's successful generation of stablecoins. And to the extent they share the same technological or blockchain DNA, then you could envision a world of really low friction cross-border payments, FX, and other things. USDC, we've made available on 18 blockchains for a reason, so that you can continue promoting that type of interoperability.
Yeah, Dante, you set me up kind of like T-ball there. That was really great. So not sure if you knew, I sit on the digital finance working group at the Bretton Woods Committee with your colleague Corey, and we just put out a great paper on stablecoins. I actually want to take a step back and maybe just for our audience, explain, why does dollar denominated commerce matter, and how do stablecoins make that like easier or more consistent? Like how does that play into sort of global commerce?
Yeah, no, first of all, it's a great question. And it was an awesome paper looking at stablecoins and cross-border payments. And so dollar denominated commerce, and frankly, the role of the US dollar as a global reserve currency. For one, again, having access to hard currencies and the price stability that comes with the US dollar, for many people at the very household level, is merely a form of a protection against currency volatility, step one. Now, the question, of course, is how do people get access to dollars in a world where so many people are on the edges of being in the formal banking system or in the formal economy? Even for something so basic as they don't have access to a national identity that would be sufficient for them to clear KYC or know your customer requirements with an international bank. And so in that environment, dollars provide for, hedges against inflation. It's the most widely accepted currency in the entire world and beyond. In terms of commerce itself, the dollar broadly, even though many central banks are trying to de-dollarize or move away from the dollar in terms of their reserves, and you could argue that might accelerate slowly. Accelerate slowly is an oxymoron. That might accelerate. Accelerate. One of the trends there, of course, is the development of alternative payment systems that are resistant to U.S. sanctions. And so when you think of stablecoins, back to the question earlier, but what would legislation do? It would ensure that we not only follow a series of regulatory regimes around trust, transparency, auditability, but that we would also address the harder-nosed national security imperatives, observance of U.S. sanctions and law enforcement and privacy standards, because a lot of what has happened around the world is really about payment systems competition to get away from the dollar and to get away from the long arm of U.S. accountability.
Yeah, Dante, you mentioned the markup of the stablecoin bill, Senator Haggerty's stablecoin bill, and the Genius Act. I think that one, from what I'm hearing from my sources on the Hill, that's probably going to be the one that moves first. Obviously, there's the Stable Act as well in the House, but the Genius obviously just had the markup. So I want to get your take on, you've been an advocate for it. Tell us exactly why you like the Genius Act.
Yeah. Well, for one, it's a product of, frankly, many, many, many years of development. And so, what I love about the three bills that you just mentioned and the process we're in right now is that it's hard to advocate for something that's a state secret. We had I euphemistically referred to the House bills in prior years as the McWaters bill, euphemistically on the House side. But now that you have not one, but three stablecoin bills in circulation on the planet, you could start to identify, one, how to advocate for them effectively, and then two, acknowledge where the Genius Act, for example, has gone the furthest of any legislation to date in addressing the real underlying equities that matter in American banking and payments. For example, states-based oversight. The United States is unique in that we regulate payments and insurance at the state level. And frankly, the states are the laboratories of democracy as much as they are the laboratories of U.S. fintech innovation. So it'd be great for the next circle that emerges, bank or non-bank or even credit unions, to be able to have that state oversight assured. The Genius Act does that. It also addresses the equities between banks and non-banks in the payment system, which you can imagine a domain of very fierce competition, has little to do with crypto. So far, none of these points have anything to do with crypto. It's just about banking interest. But the ability for banks, non-banks, including credit unions, to have a federal framework is also really important. The reason that federal framework is important is, one, we want to protect state oversight of money movement and payments subject to a federal floor. And the reason the federal frameworks are critical is because no state banking supervisor represents the United States at the international bodies. The Bank for International Settlements, the Financial Stability Board, the Financial Action Task Force, to name three, not to mention the bilateral work that happens between countries. And so if you're competing and exporting at the scale that a Circle is, you obviously want to see that there's a strong imprimatur or seal of American approval as we compete with the rest of the world. And that goes a long way. The last and perhaps most important is all of these bills really destigmatize the use of open blockchain infrastructure in financial services. And that is, to me, has been one of the biggest areas of technophobia in Washington over the last many years, is we've stigmatized the technology in the same way that no, banks aren't monolithic, crypto is not monolithic. And it's been a shame to see how often crypto has been linked to bad activity and questionable activity, when in reality, we should be technology neutral in our policy.
Do you think it is shifting towards more of a tech neutral stance now? Because I feel like maybe before this administration, there was this kind of like push and pull between the two parties. And a lot of people were standing in the middle saying, guys, this is tech. You can't argue over, technology. It's like arguing over the internet, which they actually did back in the day.
Mhm.
But looking back, we're like, that's so silly. And I feel like maybe if we fast forward 5, 10 years, people will also feel the same way about the argument between, you know, the issues, quote unquote,
Mhm.
between blockchain technology.
Yeah, I very much believe so. And frankly, it's always been my point of view that the blockchain and crypto are both technology terms of art. And you might not like them, but they're here to stay. And the early internet was terrifying because it was the dark web. Early social media might have been seen as child's play because everybody could interact with cat videos and whatever. But typically, you look back with the benefit of hindsight, and you could just think about how much has been done and how much has transpired in Washington since the election. And it's extraordinary. We have done more. I publicly stated not long ago that we have done more in the course of the first several months of this new administration than we did in the past 4 years. And then why wait for a deep seek moment to occur with money, payments, blockchain, cryptography, cyber resilience before we really rattle Washington to understand that, technology gradualism is not a great national strategy. And so I've been very encouraged by the developments we have seen. The Genius Act is a great example. But the key is we've got to move from policy signals to law. And therein lies the need for deep bipartisan consensus to be formed. And so it was encouraging, back to the Genius Act markup, it was encouraging, for example, to see Senators Mark Warner join ranks with Gillibrand and Alsobrooks and a number of other Democratic senators lock arms with their Republican counterparties and try to advance something that was in the national interest.
Yeah, as a constituent of Senator Warner, I was also very happy to see that support. I love the framing of stables as a part of sort of American financial innovation. Historically, kind of famously, Europe has been ahead of, oddly enough, the States in terms of actually implementing technology. Right, they had RFID chips in their cards sort of way before we did. And then I also like this financial technology approach to what we're really talking about is a transfer of value, right? And crypto is not monolithic. Stable coins are also not monolithic, right? So one of the important debates that I think has come up over the last few years and actually directly plays into some of the comments around the Genius Act is how certain issuers are being treated, right? So we've kind of tackled the algorithmic sort of stable in name only kind of approach to the technology. But there are also, of course, certain issuers who make their reserves more available than others. And so Circle has been famously kind of transparent with the way its stables are actually backed. How do you think about the different approaches to sort of this proof of reserves or ability to report and how we can get to that level of transparency, accommodating sort of American innovation here?
Yeah. And I don't want to lose sight of not only the title of the show today, but also to hone in on why should the average American also care about what happens with these
Right.
items? Maybe a kitchen table issue too. Um, and so, if you don't want to have, if a stablecoin wants to pass what I call the Jerry Maguire test, the show me the money test, you shouldn't have to rely on promissory statements on crypto Twitter for that as a standard. And even if you were regulated under payments law in the US, you wouldn't have to be nearly as transparent as we've tried to be at Circle in terms of disclosure with reserves, auditability, twice monthly attestations, and beyond. That's something novel to stablecoins, in part because it's really meant to be fully reserved digital money. And if at no time do you want to have buyers and spenders remorse, then transparency is your friend. One of the areas where the law and the proposed bills, Genius Act included, are going to start harmonizing that standard is by not only requiring this type of auditability and disclosure standard, but including potential, liability for the CFO and CEO of a stablecoin issuer for failing to accurately disclose what's in the reserves. And so in a world where that becomes the law, then you could envision a world where stablecoins that are all referencing the US dollar have common legal, economic, and technological standards, and therefore they should be widely fungible with one another. I think that would be a game changer for the United States. And then, so why should the average American care about this exotic crypto product that is one of the very first bipartisan pieces of legislation to advance in the Senate Banking Committee, for example? There was also an exceptional hearing in the House Financial Services Committee. Why should we all care? Well, if you think about how we move our money domestically here in the United States, we would fail several very basic tests. Number one, is it your money, truly your money, if you have to ask a bank to send it to someone and you have to pay the bank to hold it for you? And so this idea of open, widely interoperable, device-centric payments and banking, there's a giant gap in the United States in order to do that. If you travel to most of the rest of the world, you'll see that most people have access in the palm of their hands to a financial services super app. Yet here in the US, we don't. And so payments tend to be very slow. They tend to be very costly. They don't work on weekends. And your and my financial needs don't take bank holidays. And the stablecoin as a product is the digital tender, legal tender, if you will, for the 21st century, because it's instant, it's near free, it's ubiquitous, and it doesn't take a bank holiday.
Can I jump in just there? Why don't, you worked on Libra. Why don't we have a financial super app in the United States?
Yeah, well, I mean, frankly, if you do the math on one, the legal maze that you have to navigate, number one. Number two, if you think of our bank policy, the Fed, our central bank, has a priority. I think its fourth priority is to promote a safe and sound payment system, but the key word is through banks. And so that's why I cannot say enough of why the Genius Act is such an important piece of legislation for the United States. It's very little to do with crypto. It actually has more to do with payment systems innovation. And so if you want fast payments and you're promoting it through the banking system, which currently monetizes speed in the way that the old telcos used to monetize long distance phone calls, the faster you travel through the banking system, the more you have to pay as a premium service. The longer your call went over the fixed infrastructure, the more you paid for the call. And so stablecoins are now competing at a scale. Trillions of dollars of economic activity on a monthly basis are being processed through these networks. And the networks themselves are also introducing healthy competition for even key global payments companies, many of whom are turning to stablecoins to future-proof their business models. And that's a game changer for the market.
Mm-hmm. Dante, in the past, I know you've called the Genius Act an American First framework and discussed the importance of an American First regulatory regime. Kind of walk us through why you feel this way, aside from the fact that you and I are American and this is an American show and everything else. What these implementations could mean for, banks. We brought those up.
Mm-hmm.
I can imagine banks aren't happy removing these intermediaries or creating something that doesn't involve them that allows us to operate on the weekends. But then also for Americans and the U.S.'s role in the global stablecoin adoption at large.
Yeah. Well, for one, in some ways, my whole journey in this market has always been about U.S. national security and economic competitiveness. And then almost at some level to a fault, right? That in prior years, stablecoins and crypto adoption grew despite U.S. policy. Imagine what would happen if we could grow because of U.S. policy. And so, not to frame this in too many patriotic terms, but with technology competition, our policymakers actually need to give us a destination, a whole society destination, in order for us to rally not only as people but as businesses, investors, and others. And so, if I consider Circle's journey, when I joined this company, we had just over 100 people in the company. The total circulation of the USDC was a little bit of a rounding error, but nonetheless had some signs of life. But this was a product that by current banking and other standards would have been considered too risky, too crypto adjacent to be widely adopted, let alone be the subject of not one but 3 legislative proposals. You fast forward to today, we're closer to 1,000 people in the business. Our corporate headquarters is at the top of the One World Trade Center in New York. And there is no better emblem of American resilience, ingenuity, and entrepreneurialism than to be able to say this young company with this young product is going to build for the next century in the heart of the capital markets, New York City. And to have done so all along at this state-based regulatory oversight, it was always the biggest indictment I had of the Washington policy conversation was that, wait, time out. What do you mean I'm an unregulated crypto product? I have 50 state banking regulators and supervisors that examine my business every year. And so finally, in some ways, it vindicates this entrepreneurial zeal that is true of our country. It also then becomes a really interesting counter argument to the central bank digital currency question. My analogy has always been the FAA doesn't fly planes and build jet engines. We have more choice and more competition and therefore safer skies. Imagine if we could do the same for money.
Hmm. You brought up the CBDCs, and we will definitely talk about those. Also said something about risk in the early days of USDC. It was kind of like a risky move, and I feel like for a lot of companies, especially in the crypto space, a lot of it does feel risky, whether or not they're interpreting that from like a DeFi stance or just like taking a risk, entering a new market where, maybe they'll get clamped down on, especially during the past administration. For Circle, how did you guys really determine internally, hey, this is a risk we want to take and this is something we want to fight for?
Yeah, well, it's first of all, it's a great question, and I don't want to ignore the other pieces of the puzzle of this kind of type of technological architecture is also about promoting entrepreneurialisms across the edges as well. USDC, as I had mentioned before, is on 18 blockchains. That's an innovation in which every blockchain ecosystem has a common denominator, and the developers, the builders, the chain foundations, and others now have an ability to mobilize their ecosystems. So that is a very American first ideal, if you will, about promoting entrepreneurialism and democratization. In terms of risk as well, I think the key is, the way I have risk is my actual DNA. And the way I've tried to describe the risk and how to approach risk in crypto is many have been afraid over the last 6 or so years about what happens if crypto succeeds. Right? What risks would crypto introduce to banks? What are the national security risks if crypto becomes an unchecked part of the global financial system or remains in the shadows? But I've always asked the inverse question, which is, what are the risks if we fail? What are the risks if an alternative currency like the ECNY becomes the principal currency on the internet? What are the risks if payment systems innovations are developed and scaled by hostile nations and hostile actors? What are the risks if the job creation engines of these innovations remain offshore? And that's why the DeepSeek moment in AI is a good analogy, because here you have this AI product built with duct tape and paper clips to the cost of an AI.
But it
And,
works.
but yet it works. And then it evaporated something like 1.5 to, nearly $2 trillion of market value. And we don't want to find out that the innovations that we're all talking about on this conversation today face a similar shock event in which we realize our technology for crypto and blockchain finance is irrelevant.
Yeah, Dante, I think that the point about USDC's place in native ecosystems, right? Native USDC is obviously super prevalent for layer ones like Say. And it reminds me, there was, back in sort of DeFi summer, and one of the issues that ended up occurring with products like Terra was this large stacking of, I guess, what you would call yield. But I think the crypto industry has probably several different versions or definitions of yield, right? And so, most people watching the show would probably know that USDC is backed by things like T-bills that do produce interest and things like that. They're yield-bearing instruments. Can you just explain a bit about how Circle thinks about yield and what that means for sort of movement of money within these ecosystems?
It's a very, very good question. And so it gets back a little bit to Jacqueline's question as well about risk. And where there were known knowns, we knew they were there and we avoided them. For example, straying into securities law territory would have been a non-starter if you wanted to operate a stablecoin for the last 6 years. And staying very comfortably within the boundaries of electronic stored value and payments was the way we've designed USDC from the very beginning. Yield to us, and frankly, the bills in the Senate say as much. Yield is a secondary market innovation with stablecoins. And so USDC directly issued from Circle cannot and does not pay yield, in part because it's designed to be a digital dollar, meeting the three technical definitions of money: unit of measure, store of value, medium of exchange. The second you start paying yield directly from the issuer, you're straying into securities territory, or you're straying into bank deposit territory. And in our case, we've always wanted this product to be a payment system innovation with zero buyers and spenders remorse for the use of the product. Now, secondary market innovations, courtesy of the programmability and the composability of a stablecoin like USDC, have completely proliferated. Not only has the total circulation grown, but the adoption in DeFi and a whole host of use cases would not have been possible unless developers, and companies and others could also build on it and then figure out how to monetize the programmability features on their own. Now, ironically, or perhaps not ironically, most of the major regulatory regimes for stablecoins, MiCA, you cannot pay yield if you're an e-money token in Europe, which is the definition of a stablecoin. The Genius Act similarly precludes yield. And very interestingly, a stablecoin issued by a bank under the Genius Act, the bank would have to set up a separate subsidiary with a business model and a balance sheet that looks more like Circle's and less like the bank's in order to issue a stablecoin from a bank's balance sheet, which is the right model in our view.
Dante, I'm going to take a little hard fork here and ask you about the state of Wyoming is actually getting close to issuing its own stablecoin through the Wyoming Stable Token Commission, I believe it's called. Curious to know what your thoughts on that are. I mean, can states, obviously we're moving towards stablecoin regulation, which is good in the long run. Do you see a world, or do you see in America where states are issuing their own stablecoins?
Yeah, it's a good question. And I know the good folks in Wyoming very well. In fact, one of my former colleagues is a key member of the commission, Flavia Naves. And so I would encourage, far be it from me or far be it from Circle to discourage rules-based competitive innovation, including from the public sector. I say that, of course, with my caveat around central bank digital currencies. And so insofar as state-issued stablecoins don't end up becoming a proxy for a state-based central bank digital currency construct, then there should, in fact, be 1,000 flowers blooming in this market, including in the great state of Wyoming. And so the next question then is this question of fungibility. So, everyone in the stablecoin market has tried to figure out how to build a better stablecoin. And in some respects, that's the very easiest of the activities to follow. The more conservative, the more transparent, the more careful you are with reserves, the safer your stablecoin. But if you just did that and you ignored the rest of the ecosystem, from the wallet to the blockchain to how the stablecoin links to the banking system, then you might have built what I call a monetary airline mile, usable but on a closed network. And so I'm encouraged by the innovations coming out of Wyoming. I think the framework, for example, the Special Depository Institution Charter and many other examples show that the states are very much the laboratories of regulated crypto. Wyoming, New York, California, and many others have novel licenses for this sector, and that should be encouraged. But the more we do this subject to a federal floor, the more whatever is built in Wyoming can be an export product for the whole country. Should be the case.
I've heard some in the space say that a CBDC may be inevitable sometime down the line. Do you agree with that?
Not here, and not if I can help it.
Why is that?
Well, let me
Take.
Yeah, hot take, exactly. Well, the good news is apparently I'm no longer allowed to go to Europe because I just did the interview with CoinShares, and they have me quoted as a European central bank digital currency would be like competing with the internet by building an intranet, or some analogy like that.
did see.
So the simple view is we should have payment systems optionality, including public sector payment systems. My challenge with CBDCs is particularly at the retail level, the central bank digital currency construct tends to, number one, compete with banks, non-banks, and critically, I think it would just violate pretty powerful principles of financial privacy. Would you want to have to call the board of governors if you get locked out of your CBDC account with the Fed? Probably not. And so the feature of a free financial system and free society is the air gap between the central bank, your money, and how you spend it is a feature, not a bug. And so the second you start encroaching into that retail payment system from a government-led vantage point, you're effectively concentrating way too much power in the hands of the central bank. And we have an intermediated financial system in the United States, but as I had mentioned before, the challenge is the payment system goals through the Fed are conveyed primarily through banks. And if I had one recommendation for the Fed, it would be promote payment systems objectives through banks and non-banks and create a level playing field for companies like ours and other payments companies to get certain services from the Fed. If you want FedNow to work fast, this is the Fed's domestic fast payment system, then you ought to allow non-bank actors to use it who have a lot of specialization and experience in moving money at the speed of the internet. And so there's a lot more to say about CBDCs, but I think net-net, blunt private sector competition, We're going to run a science experiment with your and my taxpayer money on technologies that need 100-year lifespans. And so far, the government tech scorecard isn't great. I'd rather have a digital currency space race that marshals the private sector, as opposed to one in which the only people who could take the flight are government-backed employees.
To play devil's advocate and also educate and entertain our listeners, can you share maybe the flip side argument for CBDCs? Like, why do we want them, maybe, according to the...
Yeah, sure. Yeah, I will do this while laughing the entire time. So,
The comedy show now, yeah.
yeah, right, exactly. So the flip side is these big tech companies cannot be trusted with data and cat videos. Therefore, they should not be trusted with money. And the only way we're going to give you a trusted form of money is directly from the central bank. Therefore, you're going to be able to get safe and sound money that is digital in nature, that is usable at all times, including offline with these fancy QR codes. And all of a sudden, you're going to have this, direct from the central bank magic internet money that can be beamed anywhere at ultra low cost. I think that's one version of the case for. Other versions in the case for that I actually would agree with are we would want a world in which we have upgraded the wholesale dollar settlement system globally. And that's one of the challenges with how much the CBDC discussion in the US has been politicized, is that we have then barred the Fed from even having wholesale dialogue with its counterparty central banks around the world. And so if we didn't use the term central bank digital currency, just as if we didn't use the term stablecoin or crypto, would it be controversial to our policymakers that the Fed is figuring out how to update the Fed wire system? I want cutting edge tech in public and private sector across the United States. But because the terms have become so heavily politicized, it's been difficult even for the Fed to advance any of this work and study. Ironically, the Fed has also said they need congressional approval to do any of this. And yet we've had bills banning the Fed from starting in the first place. And so I feel partly to blame. But you can't just say a CBDC is a stablecoin killer when a CBDC doesn't exist and stablecoins have reached escape velocity all over the world.
Yeah, Dante, you made a really good sort of outlay there of the impact that this would have on, of course, like lawmakers and institutions. I want to take it back to sort of consumer privacy. One of the sort of sayings that I've heard about, crypto is the level of transparency for blockchain transactions is both a blessing and a curse, right? Because you show a law enforcement agency some enormous amount of on-chain transaction data, and they go, "Oh, I need all of that," right? Like I need to dig into all of that. I need it all available for me. And then sort of the counter argument is, of course, these sort of traditional financial transactions are already sort of quite transparent, the way regulations work today. I think there are many in this administration who do want to move towards financial privacy and, support sort of the core innovations that we're producing as an industry. But I have to ask, recently, Treasury gave guidance to lower the floor of reportable transactions in several extremely targeted zip codes from $10,000 to $600. I was just wondering, do you think that would be sort of occurring whether or not blockchain was involved, or is there a way that this impacts your view on kind of how stables are implemented in the United States, just in light of the conversation we've been having?
Yeah, I mean, it's a very, very important question. So I take on very few topics in life, and hopefully that's clear to the listeners, do I take absolute positions, except for this one. The right of lawful, to the right of lawful, the use of money should be free, period. And that means free to and free from surveillance, free from unlawful seizure, free from arbitrary seizures, and so on and so forth. And this is as true in crypto as it is in the real banking system and in the real economy. One of the reasons, for example, at Circle with USDC freezing requests, we always hold to a US rule of law standard where there's a legal injunction to do so. It's the only time we ever act. To the chagrin of many in the crypto industry, everybody in crypto is libertarian until their wallet is frozen. And so we take that incredibly seriously, and we've hardened to a very high standard there. And obviously, one of the very first global areas of harmonization in crypto was actually the Financial Action Task Force, the global body of financial crime compliance authorities, recommendation 16, the travel rule, that any type of crypto asset, Bitcoin, Ethereum, stablecoins, and beyond, would have to report the transaction information on the sender and the receiver. What's unique about crypto and why law enforcement loves it, it's exactly as you described, which is that it leaves behind a digital breadcrumb of where the money moved. Even in these very complex multi-jurisdictional events like ransomware attacks, for example, the Colonial gas pipeline was held for ransom and crypto was the payment. But today, by today's standards, we can not only track, trace, and increasingly retrieve these funds, making crypto crime a very costly form of crime because it's ultimately permanently discoverable. But at the same time, should your and my financial privacy be exposed to that same digital breadcrumb? And what I love about crypto, and this is maybe again a piece in which it's a uniquely American technology, is that today's global financial system presumes guilt and the customer has to prove innocence, which is why we go through this burden of KYC, know your customer, and all these other screens. Crypto finance presumes innocence and proves guilt, which means everyone everywhere has access to digital dollars and financial services and DeFi and all these great services. But the second your wallet is brought into a dragnet of illicit activity, your wallet can be instantly blocked, instantly seen, and anyone with a basic internet-connected device is a part of that collective witness and collective defense. Powerful technology for global financial access and inclusion, but also powerful for law enforcement and crime fighting. Do we need to lower the threshold? No, I don't think so, because I think most financial crime compliance work ends up producing huge amounts of false positives and reporting for reporting's sake, whereas I'm more interested in what I like to call effective deterrence. How do we stop illicit activity in the first place? When city mayors cite the arrest record as an example of crime fighting, my argument is if you've arrested people, the crime already occurred. Crime ought to go down and the arrests ought to go down in tandem. And I think we could prove that with crypto, you could actually demonstrate that there's effective deterrence in how you structure these platforms.
Speaking of law enforcement, Dante, your overseas rival Tether has, made it a public mission to tell the world that they are working with, U.S. law enforcement to track on-chain crypto crime. I'm curious how you see Tether fitting into this new regulatory ecosystem.
One, all of us should be encouraged that, as designed, these bills would sort of enable not only the domestic market to build and compete and have legal and regulatory clarity as the basis for that competition, but that presumably this also becomes the basis for international operators to build and domicile their operations here in the U.S. as well. And so that should be absolutely encouraging. The second piece is that all of us, every single one of us, when a bank fails overseas, not every bank in the United States and every bank around the world has to explain its reputation because of the failure of one bank. But yet in crypto, at least in terms of how the media is covering this sector, no crypto company can escape the good or the bad actions of any crypto company. And so the more we could demonstrate that we're genuinely in an all ships rising moment, the better. And that ought to bring into scope international actors, international exchanges, international blockchains, and figure out how to attract them here in the United States so that they could build here in the US. I mean, frankly, one of the big indictments, if you compare, for example, the failure of FTX overseas in Japan versus the failure of FTX here in the United States, FTX was garden variety human risk, not garden variety technology risk. But the fact that it was nearshore and that it blew up meant American customers and American markets and others had no recourse. In Japan, however, the FTX entity that was regulated in Japan by the JFSA not only was able to return funds to customers, its failure is being treated by the Japanese regulators as an example of the benefit of bringing crypto into scope and bringing crypto onshore. I would love to see, not just with stablecoins, but with an eventual crypto market structure piece of legislation, that any entity, any actor, anywhere has no excuse to not build their business here in the United States. If you want crypto to equate to jobs, and if you want crypto to equate to the next generation of competitors and developers rising up from the Wyomings on, and we need to build this innovation here in the United States.
I think that's an incredible place to put a pin in the crypto in America discussion. I do really obviously want to thank you for your time, Dante. We do love to wrap up with a couple rapid fire questions if you're up for it. All right, so I'll kick it off. What would you be doing if you weren't in crypto?
It's a good question. I probably would be, somewhere in the banking and payment system. I care a lot about the payments activity that crypto enables, and so that would be a quick guess.
Okay, not straying too far from home on that one. All right, so if you could have any fictional character as a best friend, who would it be? It can be movie, book, TV.
That's a good question. Any fictional character as a best friend? I mean, it'd be hard not to want to hang out with Neo, for example, from the Matrix.
Like the most sociable guy.
Dodge thing.
I've never
a good
seen
one.
The Matrix. That
That-
probably says a lot about me.
That is
Breaking
breaking
news.
news. Eleanor. All right, one last one. If you had to participate in any Olympic event, what would it be?
Ooh, that's a good question too. I guess it would be martial arts or taekwondo or something like that. That'd be fun.
Perfect.
Last thing, Dante, to wrap things up, aside from what we've discussed, what is one other thing you think our listeners should pay attention to that you're watching, maybe in DC or just in general?
Yeah. I mean, there was this famous speech in which people described the distance from Washington as the reason Silicon Valley is successful. I would argue that the distance from Washington, especially in this environment and for the next 4 years, is going to be a gap for developers, investors, and the public. And so the more people pay attention to what happens in DC, the better. In general, not just crypto, but all policy coming from the city really matters to the nation.
Yeah. And this podcast, of course.
And this podcast,
Of course.
Of course.
chief among them.
Amazing, Dante. Thank you so much for coming on today. We really enjoyed having you.
Thank you.
Thanks, Dante.
Thanks, Dan.